Hello, folks. Thanks for tuning in to TD Talks. I'm your host, Fiduciary Investment Advisor Taylor Davis. And today, TD Talks Market Commentary. Today is January 6th, 2026. And I'm one of those people on anything I have to write down. I will be writing 2025 until probably May. So let's get into the market commentary. Today, the market isn't moving on earnings reports or economic data. It's moving on geopolitics. The biggest story happening in markets right now is the capture of Maduro and the growing belief that the United States will play a major role in stabilizing and reopening Venezuela's oil industry. Saturday morning, I get up, our son wakes up. He says, "Daddy, I want pancakes." I go downstairs, I start making pancakes. Later on, my wife brings our daughter downstairs, and I said, "I have two questions for you. Do you want chocolate chips in your pancakes? And did you know that we captured the leader of Venezuela last night, kidnapped middle of the night, like mob style, like Goodfellas style?" And she says, "Yes, chocolate chips. No, I didn't know about the dictator. What is happening?" That's the way a lot of the world reacted. I don't know how many chocolate chip decisions were involved in, the decisions and the reactions across the world, but that's what went on in our house. So Venezuela holds the largest proven oil reserves in the world. For years, those reserves were locked away by corruption, sanctions, and mismanagement. Lots of mismanagement. Now, investors are asking a simple question: what happens if those barrels eventually come back to the global market? Yesterday, on Monday, we saw the first reaction. Energy stocks moved sharply higher. Oil producers, refiners, and oil services companies all rallied for the most part. Not because oil prices exploded. They didn't. That would be rational. But are we in a rational world or in a rational market? I think not. They didn't. Oil prices actually stayed fairly controlled. And in my opinion, that matters. That matters. That plays a part in this discussion. Markets aren't pricing in an overnight surge in supply. They're pricing in long-term opportunity. I think as investors bought in and had that rally go up in those in that energy sector, I was a buyer of them. My thought process behind it for myself personally is I'm not buying into those companies based on what this development in Venezuela is going to do over the next week, but what I think it's going to deliver in the future values over the next several decades. Again, I play the long game. I'm always playing the long game. It's going to take years, not months, to rebuild Venezuela, their oil production. Infrastructure is damaged. Investment will take time. Stability has to hold. This isn't like watching an hour-long episode of Landman where they get a rig up and running. Believe it or not, this is the real world. I would love for Billy Bob Thornton to head down to Venezuela and get me a rig going, but that's just not the way it works, honey. So stay tuned on the development of that. It's going to be a long-term development, and I guess it's viewed as a long-term investment for the United States government. So what the market is reacting to isn't today's oil supply. It's a possibility of future access. Today, energy stocks are holding on to those gains. The broader market has responded positively as well. Dow, S&P, NASDAQ, they've all moved higher this week, with energy helping, lead the charge. Defense has played a major role in that as well, because when there's conflict, defense companies, defense tech companies tend to do very well. And apparently there's a lot of defense tech used in the mission to capture Maduro. For the week, the major indexes are all up overall, and year to date, markets remain solidly positive. I know we're 6 days into the year-to-date numbers, but we got to take what we can get. Despite volatility earlier, in this year, stocks are still higher than where they started. In my opinion, that tells us something important. Investors are looking past the headlines for a little bit at least, but finally for once. It felt like all of 2025, zero economic data was considered in the market. Everything was headline risk. If you listen to my market commentary podcast throughout 2025, I think I said headline risk 3 or 4 times in every single episode. Investors are looking past the headlines and are focusing on long-term growth. So here's a big takeaway. Markets don't wait for certainty. They move on expectations. There's an ambiguity to this game. And right now, expectations are shifting toward greater energy stability, greater U.S. influence in global supply, and long-term opportunity for American companies. That's why energy stocks moved first, in my opinion. But let me kind of walk this and bring it back to real life. If you own a home and hear that your neighborhood might improve in 5 years, so some big development coming in, or Publix maybe, that's going on in our hometown in Northern Kentucky, you don't sell your house tomorrow, but you do feel better about owning it. That's what markets are doing right now. They're not celebrating immediate results. They're responding to future potential. Now, this is where discipline matters. In my opinion, moments like this are not about chasing one sector. They're about understanding how different parts of the market respond to different environments. Energy benefits from geopolitical change. It's just a fact. Technology benefits from innovation. Other sectors shine in other cycles. That's why responsible diversification still matters. It still matters. I know you can read Wall Street Bets and see somebody, really banging out a big win on some super concentrated play. More often than not, you see the post that it went the wrong way. And so that's why I believe that responsible diversification matters. No single story should dominate a long-term plan. If there's one mistake investors make during headline-driven weeks like this, in my opinion, it's reacting emotionally. Buying because something is exciting, selling because something feels uncertain. In my opinion, long-term investing works best when you stay calm during big news and focused during quiet weeks. Things like this jump up. I mean, it was a quiet Saturday morning, and then, the whole landscape of the geopolitical stakes in this world changed. So as we look at today's market, here's the balanced view. Here's my attempt at having a balanced view. Yes, geopolitics are driving energy optimism. Yes, oil stocks have responded positively. And yes, markets are higher for the week and year. But the real story is confidence. Confidence that long-term growth continues even when the headlines are loud. And my review remains the same. Stay diversified, stay patient, and stay focused on where you're going, not on today's noise. That's today's ethos approach to this market. Stay focused on where you're going, not on today's noise. If you don't like the song that's playing while you're driving your car, you don't wreck the car to stop it to change the music. And if you love the music that's playing when you're driving your car, you don't take your hands off the wheel and celebrate. Maybe you do, but I wouldn't do it that often. Take your hands off the wheel to wave your hands in the air like you're at your favorite concert. Might not turn out so good. So stay focused on where you are going, not on today's noise. That's today's TD Talks market commentary. Thank you for tuning in. You can subscribe on Apple Podcasts, Spotify, and YouTube. The views and opinions voiced in this podcast are solely the views and opinions of Taylor Davis and do not reflect the views or opinions of any other entity or organization. The content provided is for informational purposes only and is not meant to be specific investment advice for any individual. Please consult with your financial advisor to address your unique circumstances. Taylor Davis does not provide legal or tax advice.